Hi, I'm John Stevenson, the Guaranteed Retirement Guy. Today we're going to be talking about how to swap your current annuity and get paid for the new one. So how would you like to get paid to swap your annuity? Well, there are annuities out there that will give you a bonus, a premium bonus or an income benefit-based bonus to swap your annuity. Now, of course, you have to look at the drawbacks. If you're in an annuity that's 1 or 2 years old, your surrender charges might be too high, okay? But maybe not, just depends. And then, of course, insurance companies typically will not let you swap unless it's at least 2 years old. Okay, so a lot of times they will have that rule just to protect you from agents who will want to churn your accounts for more commissions. Okay, you don't want any of that. You don't want an agent to come in and sell you something and then 2 or 3 years later say, hey, there's something else on the market, you should totally buy it, and they'll make more commission, and of course you lose. It has to be much better than what you could lose in your current contract. Okay, so just fair warning, before you swap anything out, compare everything. Make sure that if you are getting paid to swap, it's at least as much or almost as much that will cover your losses, okay? Or maybe the income is like double, right? I did that in one case for a lady that I worked with in New Jersey, and she had a great annuity. I mean, it was great for growth, not for income though. It was like $670,000 in account value, but in order to get rid of it, if she were to swap it, she would incur a $60,000 surrender charge. We're like, oh, that's a big surrender charge. But we were looking at the guaranteed lifetime income and it was only like 30 grand per year. And that's not good. And so when we were comparing that with another annuity, this other annuity gave her a 15% premium bonus. Okay, so she's getting what? She was going to surrender her contract. She was going to lose 60 grand, so she's only have 600,000 left. But then she'd get a 15% premium bonus, which means her account balance will be right back up over what it was. It would be like 690,000, and her income was going to be like 70 grand per year at retirement. So it was a win-win for her. Like she was going to lose, but then she was going to gain it all back plus some, and she was going to get double the income. Okay, so when you're looking at comparing, yours is the one you're thinking about swapping with. It may not be as drastic as that, but it still has to make sense. All right, so I'm sharing my screen, and I want to show you all the different annuities out there. We're going to look at the different bonuses that you can get, okay, to get paid to swap your annuity. So in this instance, I'm just saying, all right, you're 66, single, you got $450,000, and you're thinking you want to swap it. So maybe you're lucky and you've got your contract that's been, it's out of the surrender charge period, so you don't have any surrender charges. And let's say it's for $450,000, or let's say it's $500,000, and your surrender charge is 10%. Okay, so you're taking out $450,000. So that's a pretty steep surrender charge. But you look at this and say, all right, well, income benefit based bonus is 25%. Well, that's pretty good. That is well over the 10% that you're going to lose, but that's an income benefit based bonus. So I would say if you want to swap something, you need to get a premium bonus because that's the actual dollar amount that will be put into your account. Now, you may not be vested for a while, but it's still your money. Okay, so if you look at this, all right, we're looking at 25% income-based bonus. Obviously, this, if you were to put it in here and defer it for 4 years, it'll give you $55,000 a year. That's pretty good. Okay, but so here's a premium bonus. That's good. That's 9%. Okay, so that's a company where we're like, all right, well, you're going to lose 10%, but you get 9%, so you're pretty much getting it all back, and your income with this old one is going to be $40,000, but you're going to get 49, almost 50 grand from this one. In that case, all right, that's not too bad. So you're only losing 1%, and you're getting another $10,000 per year in income. And even if you take that over 20 years, that's substantial. That's huge. Okay, so it's like another $200,000 in income, and you were charged a 1% surrender fee, which was like $5 grand. Okay, so in that case, the net surrender loss was $5,000. Okay, but your gain was $200,000 more in income. Does that make sense? Would that be something that you would be willing to swap your current annuity for? So, all right, let's look at a few others. So let's see, 8% premium bonus. That's with Equitrust. So you got 10% income benefit. So let's go in here and I'll say, all right, well, I want to look at just premium bonuses. What do we got there? All right. See the highest income for that. So Sentinel Summit. So it's interesting this one came up on top because this one was the actual annuity that I put my client into with that 15% premium bonus. So that's nice. Nice to see that they're still offering that. You'll see though, it's $49,000. So it's not as much income as the other one, but sometimes you are not able to swap your annuity for another contract unless that premium bonus is more than what you're losing in the surrender charge. Sometimes they won't even take it unless they can see that you're going to be made completely whole. Okay. And usually they want you to be at least 2 years into your contract, maybe 3 years. So it just depends on the carrier who you are with right now. So, all right. So 15%, that's pretty good. Sentinel is offering that. And then you've got Equitrust is offering 12%. You've got 10% premium bonus that American Equity has actually been offering for quite a while now. Let's see, 11% F&G, 12% F&G, 14%. That's kind of nice. But here's the thing, though: they're giving you more of a premium bonus, but less income. Look at this. If your sole need is for income, then forget about these because that's way less income than $49,000 a year. So it just depends on what you're looking for. If you're looking for just, hey, I want to be whole because my account's gone down 30%. And I want to recoup some of that, then a premium bonus is nice because it makes you partially whole if it gives you, part of it back. Of course, if you're only gone down 10% and then you get a premium bonus of 10%, well, then you're completely whole. You've got all your money back that you lost in the market. But keep in mind, some of these premium bonuses that they're giving you will also throttle your potential gains in the future. Yes, they will throttle it, so that if the market or the index does 10%, you might only get 5% for the life of the contract. So over time, they're going to make out better just because you were willing to take that bonus up front and limit your gains on the back end. Okay, so don't do that if your sole purpose is to just grow that account for legacy. Okay. If you're doing it for income, then who cares? Okay. At that point, we want the highest amount of income as possible. Maybe you have other accounts that you're leaving behind as a legacy as well. All right. So let's look at, I'm just curious if there's any others here. Let's see, 14%, 10. A lot of these are 10%. Here's one by Athene. That's 15. Well, a couple by Athene. Yeah. All 15% premium bonuses. That's nice. So yeah, but the income's less, but the account balance probably lasts longer. Let's see if we can even see. Just curious what growth rates they've seen on here. Yeah, they got some high participation rates, 255, but that's going to be reset at the end of the 2-year period. And if options are costing a lot, they're going to lower it substantially. So a lot of times when you see guys showing you 13, 11%, 9% returns, that's not realistic for 30 years. Okay. So keep that in mind. Yeah, that's interesting. So yeah, that's the thing to remember with some of these is if you get something, you're going to have to give something, right? You put 500 grand in there. Yeah, they will give you a 15% bonus. That's pretty substantial drop in your account. But if you're limited on your income and limited on your gains later on, not so much. All right. So that's pretty good. So again, if you're looking for highest income, stick with the ones that give you the highest income, okay? And in order to swap your annuity, you will either have to have no surrender charges or very low surrender charges. And in conjunction with those surrender charges, you will want a premium bonus, okay? Not an income-based bonus. Those are nice, but usually they have to have a premium bonus, an actual bonus on the money you put in so that you're made whole, okay? So that any surrender charges you incur from swapping your annuity for another one are completely wiped out by the gains that you make from the premium bonus from the new contract. And of course, they also want to see that you're going to get more than just that. Okay, they want to also see that you're getting more income, or if it's a MYGA contract, maybe you're getting a 5% return instead of a 3% return. Okay, a lot of things to think about. They want to make sure, especially on those fixed ones, they want to make sure that you are better off at the end of that term with the new contract versus the end of the term for the old contract, for the MYGAs. So anyways, if you want to chat about annuities and you are curious about what they will pay you and you want to talk with an advisor like me who's willing to show you everything regardless of what he is being paid, then I would recommend that you book a call with me. There's a link below this video. It goes directly to my calendar. I'm not going to bite. I'm not going to try to sell you anything. Okay, I just want to show you what's available. And if you're seriously looking for annuities, then I'd love to be in your corner. I'd love to help you set one of these up or several if you want several of them. And look forward to chatting with you then, and we'll see you in the next video.